Good afternoon, everyone. Happy Friday and happy end of the month. Welcome to the daily Volatility Box review for August 30th, 2019. We are TOSindicators.com, home of the Volatility Box. Today's Friday activity was very similar to last Friday's in that we had a lot of really good trades in the indice markets. In fact, today we had 4 setups. All 4 were winners, where the S&P gave us T1 and T2. The Nasdaq only gave us a T1. The Dow hit both our T1 and T2, which are our first and second targets. And the Russell futures also hit the first and second targets. However, the Russell futures out of the lot of all 4 was the most impressive in terms of buying from the volatility box level, and it gave us the most edge, but all 4 were real nice winners. We also had one trade in the crude oil futures market, which unfortunately was a loser, and that was a loser for $300 a contract on both of our contracts. And finally, we had 2 trades in the 30-year bond futures. The first one was successful, and the second one was a loser, unfortunately, and that brought our overall P&L in the bond down to negative 187.50 to be exact. So to sum up today, we had 7 trades in total. Out of those 7 trades, 71% of them were winners, and that led us to an overall daily P&L of 1892.50. And now if we take a look and measure this entire week's performance, you'll remember Monday was a winner, Tuesday was a winner, Wednesday was a winner, Thursday was a winner, and Friday also was a winner. And that gave our total P&L, or that brought our total P&L rather, up to just a little above $10,000, so $10,413, and that's trading just a 2 lot with all these setups. If you trade just the micros, you still had setups today in the indice markets along with crude, which I think a lot of you took because a lot of you seem to send us emails excited of closing Friday out on a win, which is awesome. All right, let's dive into charts and see what we can learn from today's activity. We'll start with the S&P futures and we'll approach this market the way we approach all of our markets. We take a look at the first hour and we check to see whether or not we breached either side's aggressive volatility box. We see here that we very clearly didn't, and that was our sign to essentially use the aggressive volatility box for the rest of the day. Our entry in the S&P futures came right here as price action fell in the 8 to 9 a.m. East Pacific time. We had our stop outside of the volatility box, 7.5 points wide. First target was the 7.5, and our second target was at the target line, which was 8.5. Both were hit. And so that gave us a T1 and a T2 on the S&P futures. And then for the rest of the day, we sort of just drifted around, not hitting any sort of edge. And after 11 on a Friday, we're pretty much done trading. All right, let's take a look now at the Nasdaq futures, which did not have the same type of follow through, but it still gave us our T1. So once again, the same concept. We take a look where we have our timeline and we check to see whether or not we breached either side's aggressive volatility box entry lines. We did not. That was our sign to use the aggressive volatility box, and as price action fell perfectly into our entry lines, we were able to buy this dip. We had our stop outside of the volatility box. We announced this trade in the Mr. Top Step trading room. Our stop was 25 points outside of our entry. Our target, the first target was 25 points, and our second target was at the target line, which unfortunately was not hit. We did hit that price towards the end of the day, but not before we also got stopped out on our contract that we brought up to break even. Unfortunately for a few ticks, but that's how trading goes, and we move on. All right, let's now take a look at the Dow futures. Same exact concept. So if we draw our line, you'll see we measure in the first hour of trading activity. We check to see whether or not we breached either side's aggressive entry lines. We didn't. That was our sign to use the aggressive volatility box, and we caught this, the price action falling perfectly once again into our volatility box. Stop was outside. We gave it 65 points of room. Our first target was a 65, and our second target was a 71, both of which were hit. All of these trades, by the way, were announced in the Mr. Top's trading room, just in case you guys are interested. That is a separate service, unfortunately, though. All right, and finally, let's take a look at the Russell futures. So earlier in the video, we talked about how the Russell essentially had the best bounce back for any of these 4 indices. So let's take a look at what we actually mean. So we look at the entry lines, the first hour once again, and we see we didn't come close to breaching either sides of the volatility box aggressive entry lines, and that was our okay to use the aggressive volatility box. All right, so the Russell, when price action started to fall, fell perfectly into our volatility box entry lines, but that's about the deepest it fell. And that's really our edge where it tells us that the Russell was the least volatile. It wasn't being dragged down into the extreme volatility ranges as much as the other three indices were. And so our entry was once again at the entry line of the volatility box, which is the cyan entry line. Our stop was outside of the volatility box, 4.5 points of room. First target, the 4.5. However, our second target here was 9.5, and we hit both of them. And so what you may have noticed compared to the S&P and the Dow is our second target was quite a bit wider, and that essentially let us pull for a little bit further where we could essentially have a risk-free trade looking to see whether or not we can get 9.5 points on the Russell futures, which we did get. Okay, let's switch to the crude oil futures and take a look at that the trade that stopped out. So once again, we had our permission to use the aggressive volatility box since we didn't get close to breaching either side of the entry lines in that first hour. And our entry essentially came right here where we tried to catch crude falling. Unfortunately, we were stopped out. It was a pretty quick open and closed trade. Our stop was 30 cents outside of the volatility box, or 30 cents wide. And so we essentially were stopped out on both contracts for 30 cents a pop. And finally, let's talk about the 30-year bond trades. All right, so once again, approach this the same way. If we take a look, and as we see, we've had clear permission to use the aggressive volatility box, and then we started looking for breaches. Our first breach came right here where our order, so we have once again limit orders out there waiting, ready to catch any of these orders, was filled right here. We risked 4 points, or 4 ticks rather, in the bond futures, and our target was hit right there at the top of this candle, and that gave us our T1. Our T2 stopped out for a break even in the very next candle, and then we saw price action continue to fall. And since we did get T1, we attempted to try and capture this trade as well. Unfortunately, our stop was 5 ticks wide here, and that 5 ticks was taken out by the tail of this candle. And so it was not fun to essentially see us get stopped out for a tick before the bonds continue to make this kind of a move. But unfortunately, that was a stop out, and that was the trade that turned us over to net negative on the bonds. However, despite even that losing trade in the bonds, we see that we ended the day up really nicely. We had 7 total trades. 71% of them were winners. We ended the day up really nicely. 1892.50 was our profit, bringing our overall weekly P&L up to $10,413 in 5 days worth of trading. That's the power of using the volatility box. We've stressed this so many times now. Our models work. Our models are thoroughly back tested. Our models are refined every week. In fact, a new version is coming out this upcoming Sunday, and you can talk to any of our members. We add new features every week. We give you a trading plan. We give you some resources to get started. And I think a few of you have even asked us to do some sort of a live trading. We're looking into trying to make something like that happen. Again, I think we've told this to almost all of you who've asked us, but we're also in the Mr. Top Step trading room. So if you'd like to join us there during the daytime, you're welcome to do so. But again, a different service, separate service, so that's up to you to decide. Anyways, we also plan to do a monthly review of the volatility box, which we'll release this weekend, along with our next tutorial. So stay tuned. Lots of good stuff coming along. But I hope you have a wonderful long weekend. Take a break, relax from the screens, celebrate this week, celebrate having a really nice winning week. I know quite a lot of you emailed us about your trading successes this week, which is really nice to hear from our side. Our team really appreciates getting those emails, and it always brings a smile to our faces. Anyways, we hope you have a great weekend. Take care, and we'll see you next week.